Hello, everyone. Welcome back. Welcome back. It's been a while, with vacations and everything. But a lot's been going on since the last time I streamed. We entered technically into a recession, but the stocks and the crypto market seem to not care. There's been a rally and numbers have been going up. Everyone's happy, but something has to give. And I think I know what that is. I don't think this rally is going to last. I still think it's a good time to get into the market, but I don't think this is going to last. So let me give you my thoughts. Before I begin, hit that like button. And if you want to continue to see material like this, please hit that subscribe button and hit the notification button as well. The bell to let you know notified when I post a new video. So let's get into it. Markets have been up. Everything's in the green. You look at the Dow, you look at the S&P, NASDAQ, everything looks very, very good. Very promising considering what we looked at several months ago. We looked pretty bad. So this is a welcome relief, I would say that. Also, crypto. You see Bitcoin's up 2.5% up to 24,000. ETH is up almost 2,000. Probably based on the merge that's coming up. They announced that it's going to happen in September, where they're going to go to proof of stake. So that's big. Solana, I'm a big fan of that. That's increased as well. ADA, big fan of that. It's increased. So overall, crypto market's also doing good. You look at the top 10 in the crypto market. You look at over the last 7 days, Bitcoin's up 5%, ETH's up 15%, BNB is up 4.3%, Cardano's up 7%, XRP is up a percent, Solana's up 15%, and Polkadot has entered the top 10, and they're at 8.7%. And in later videos, I'm going to talk about my crypto faves, and I'm going to talk about what I like about the projects. But here, it's good to see that the crypto market's getting somewhat healthy again. Still in a bear market, but it's nice to see rallies like this. So Charles Bilello, I follow him a lot on Twitter, and he puts out good information. And he just talked about the S&P year over year. We hit a record high in Q2 2021 of 13.5%. Now we moved down to 10.9. So he also indicated sales growth has slowed and companies are having a more difficult time passing on rising costs to their customers. That leads me into the job market. One of the things I want to talk about, I do see this rally here, but technically we are in a recession, and I don't think that information is caught up to the markets yet. And here are some things that I see that I think may impact the markets coming up. Jobless claims. Charlie also mentioned after hitting a record low in April, a 4-week average of initial jobless claims has increased by 84,000 or 49% to its highest level of the year. Tends to be a leading indicator for the job market. Recessionary signals continue to build, which is I've been saying, and I've been thinking about it as well. I'm like, wait, the job market is strong. Are we really in a recession? And the stock market's acting like we're not in a recession. So I'm thinking, maybe things will just continue to go up. But like I talk about in this video, you'll see there are things that are concerning. Companies are announcing job cuts. The prices are increasing. People, as far as companies' profit margins, they're not seeing the same profits they were seeing years ago. Not enough money being injected into the economy, and it's starting to impact their bottom line, which leads to them cutting costs. And sometimes where you want to trim the fat is going to be your employees. So Peloton, you can see up to 800 jobs lost. Microsoft, 200, and they announced up to 180,000. Ford up to 8,000. They're looking to move towards electric, so some of these employees will be impacted by that. Tesla 229. Remax, mortgage firm up to 17%. JP Morgan Chase, they say they're going to lay off or reassign more than 1,000 employees. Best Buy recently announced something this week. They didn't give the amount, but they are going to lay off due to decreased sales. Oracle, unknown amount. Walmart, 200 corporate employees. Shopify, 1,000 employees. Robinhood, due to the downtrend in crypto market, 23%. 7-Eleven, they're letting go 800 to 880 corporate jobs. And Calm, the meditation app, 400 employees. So also, we talked about the job market looking to be in a downtrend, and I see in the future that's probably going to continue. The Chinese economy, not enough people are talking about this, but their economy and the U.S. economy is very intertwined. As you know, they have a zero C-19 policy has been impacting their economy. You know, they've been having lockdowns, and when I say intertwined, it's intertwined with, you know, Tesla. Tesla does a lot of business with them. A lot of big U.S. companies also do business with China, and that impacts their bottom line. This week, they reported over 5,000 cases in Hong Kong. That's the highest in over 4 months. Also, they locked down a popular resort island in China as well. I know there were some reports of U.S. tourists also being there, and they were unable to leave because of lockdowns. And this is something that's going to continue. So whenever they have cases like this, you know, they're locking people down, and that stops business. It stops the economy. Not to mention, you have that going on, but Evergrande, that was talked about last fall, still going on. Evergrande, for those who don't know, is the largest property developer in China, and it defaulted on their interest payments. This resulted in home prices and sales falling, also a lack in consumer confidence in the Chinese economy. Also, about last month, over 1,000 protesters protested in front of the Bank of China in Henan. And apparently this bank had 40 billion renminbi, or equated to US dollars, $6 billion, missing in deposits, and they notified their customers that their accounts would be frozen. Can you imagine you having money in a bank and they're telling you can't access that money? Apparently this bank and the branches of this bank had a relationship with a private firm. This firm was embezzling the money through fabricated loans, and the branches impacted by this were about 12% of China's assets, or China's banking system. So, you know, a lot of banks, they operate with the fractional banking, where, you know, 10% is guaranteed and they loan the remaining 90% of your money out. And apparently this bank had to deal with this private firm, and this firm was up to some shady business. And now a lot of people's money are frozen and they can't even access it. So you add that with the COVID lockdown and their economy already being fragile, it's not a good situation. People are threatening to not make mortgage payments anymore. China, you know, the middle class, they're heavily invested in the real estate market. And Evergrande, what they were doing is taking deposits, not finishing homes, taking more deposits to build more projects. So you have a lot of incomplete homes in China, and no one's living in them, and people still owe mortgages on them. So China is not looking good right now. Not to mention, when they report numbers, you can't really trust what they say. But based on all indications that I see, China is not looking good. And if they go down, you know, they're going to try to prop up the economy by printing more money. But if they go down, that impacts the world. You know, not too long ago, China was gunning to be the world's currency. You know, they were gunning for the US dollar. I don't think this is going to help their case, but, you know, this is something to pay attention to. The housing market was going strong, you know, when interest rates were low, inventory was low, and, you know, just everybody saw their home equity just increase, boom, double, triple. It's crazy. But now things are taking a turn for the worse, and that's basically inflation. Jay Powell and the Fed, they were increasing their rates, and now it's impacting the rates of the mortgages as well. If you look here, U.S. mortgage, if you have, you know, at minimum a 700 credit score, the national average for a 30-year fix is 5.9. If you look at, for someone under 700 credit score, 680 to 699, you're looking at 6.5. We're talking about, you know, a year ago where this was half that amount. So, you know, just that increase in interest is, you can't, you know, that's diminishes your buying power. So homes that you were looking to buy at the beginning, you know, you can't afford that anymore. And so that is drawing some, I would say, a downtrend in the housing market. If you look at the housing market as far as inventory goes, if we track back like 5 years, you look at 2018, you know, it was high. 2019, we were high. 2020, we were high. That's around COVID starting. And then I think, you know, 2021, it was low. 2022 appears to be the lowest as far as inventory goes. And that was due to supply issues as well, supply chain issues. But now the trend is what's going back up. And a lot of analysts and strategic people are saying that the downtrend is going to continue to go up. And if the supply goes up, you know what happens. The prices have to go down. So my conclusion here is, overall, I think the rally is going to end. You know, take profits if you can. If you're a trader like that, I'm a long-term investor, so I don't tend to not do that. But it's all good. It's a good opportunity to DCA into your favorite cryptos and stocks. Due to the red flags I discussed in my video here, I am not going to FOMO into my favorite stocks right now. I'm going to continue my same plan, DCA little by little. But I think this rally, it's not going to stay forever. Inflation's on the downtrend, but it's still over 8%. And right now, the Fed and senators and politicians are out on vacation. They come back to session in September, and when that happens, some big things going to happen. The inflation number is going to come out again, and I imagine Jay Powell and the Fed, they're going to increase again by, who knows, could be 0.25, 0.5 basis points, maybe 0.75 if he wants to get aggressive and get control of inflation. And then you have the looming crypto regulation coming on as well, and who knows what's going to happen. It could be good for the crypto market, it could be bad, and that's going to impact prices. Until then, I'm going to continue to DCA into my favorite coins, my favorite cryptos, favorite stocks. I love Tesla, I love Amazon, Google, Disney, Apple, Bitcoin, ETH, Solana, Avalanche, ADA, Cardano, and Polygon Matic. Those are my favorites. I'm going to continue to invest in them. So if you like this video, let me know what your thoughts are. Let me know what your opinions are, if you agree, disagree with me. And if you found any type of value in this video, please hit that like button, subscribe to the channel, and hit that notification bell. Be notified when I put up new content. Thank you guys. I hope you enjoy your weekend. Until later. Bye.